Hey traders, Todd Gordon here with TradingAnalysis.com. This is going to be your video update for Tuesday, September 15th. And guys, we're only 2 days away from one of the most important Fed meetings of history. So will they hike? Will they not? We'll see. The markets are big time consolidating right now, which is actually right on cue, and they're chasing out patterns that are very, very basic and very textbook. So let's dive in here. This is the S&P and the 3-hour. You can see there's quite a nice consolidation pattern here in the S&P 500. This is the 3-hour chart, and we're tracking the cash index. This right here is going to be the SPX cash scale, and then over here to the right is going to be the SPY. So using the rules and guidelines of Elliott, let me show you right where we are right now in this count. So I have this as your first wave. This real sideways mess was wave 2. Flash crash part 2 was wave 3. Now we're tracing out a very nice fourth wave triangle, which is actually quite textbook. So it's a 5-wave move labeled with letters A, B, C, D, E. Basically, the highs get lower, the lows get higher. It's a consolidation pattern that happens before key economic data announcements like this or some kind of major event, and usually it resolves itself in the direction of the prior trend wave, which was wave 3, which was down. So that aside, that's kind of the roadmap. Now let's use the little scale at the bottom left-hand corner of all your maps, which tells you how long each leg of the journey should last. Okay, so if we do time and price measurements of all waves that we've known in the past to figure out where we're going in our trip, we have a wave 4 time resistance zone between September 9th as far out as September 15th. That's tomorrow. Okay, inside of that we have a 4v3 time measurement that's contained inside the 2 outer levels, which is 4v2. So what you're doing basically measuring time elapsed in wave 2 compared to ongoing 4. You're measuring time elapsed in wave 3 drop compared to ongoing 4. So we have a time window, the 9th to the 15th. Let's flip it on the from the x-axis we just looked at. Let's do the y-axis. Y-axis, we have a 38% price retracement of wave 4 verse 3 at 1953. And you have a 50% price retracement at 1983. So guys, that's your zone. 1953 to 83 between September 9th, September 15th. That's your complete wave 4. Setting us up for wave 5 decline down into this really thick and meaty fib support zone of 1800, actually 1803 up to possibly 1870. If we get anywhere above 1992, I want to be out of this trade, and we are already short. Okay, so I'm going to look to add to this position. I do have the 200-201 call spread that we've been talking about. We have just 4 days to go, so I'm going to go ahead and try to carry that through the Fed meeting. The spread is still worth 20 cents. Okay, so we sold it for quite a bit more than that. So the trade's looking pretty good on the downside. That is not the margin department calling there for margin call. So we're going to look to try to get a little bit more directional on the downside right after the Fed reaching for that 1870 to 1800 target in the SPY. Okay, guys, so that's using Elliott Wave, which is your roadmap, and then using fib price and time to figure out how far each leg of the journey should last down to a wave 5 target. All right, guys, hope that helps. Give us a like on the YouTube window there if this video did assist you. It helps us rise up in YouTube ranks. And good luck, guys. Hope that trade works, helps. It's going to be a bumpy Fed ride, so get ready. Talk to you guys soon.